I just invested $100 into my Roth IRA, and the goal is for that $100 to beat the S&P 500 in the long term. I didn't base any of my stock picks on headlines. It didn't matter what the YouTube gurus were saying. I didn't even base my picks on a gut feeling. I simply followed the data. Very simple data, but data. Today I'll show you exactly what I bought and why. I was very intentional about how I designed my systems for buying stocks in this video series. I didn't want to be a typical stock picker, and I definitely didn't want to spend hours analyzing dozens of companies only to end up with paralysis by analysis. Instead, I wanted a simple system that removes as much emotion as possible and lets the data make the decisions. I divided my top 40 high conviction stocks into two different tiers. Tier 1 contains what I believe are the highest quality, best of breed businesses with durable competitive advantages. Tier 2 contains companies that are still outstanding businesses, but carry a little more uncertainty or are still working on building their competitive moat. These tier lists may evolve over time as companies improve or decline, but once the companies are in these tiers, the buying process doesn't change. I only buy companies where the numbers clearly suggest that they're trading at a meaningful discount. To do that, every stock receives an opportunity rank. This rank is a weighted combination of two data points. Analyst upside. To calculate analyst upside, I take the median price target that the analysts have forecast for the stock and determine how far away the current price is from that target. The second data point is PEG ratio. PEG ratio shows how expensive a stock is while also factoring in growth potential. Each company is ranked in those categories, weighted, and combined into one score. The higher the score, the better the opportunity according to my system. Simple, objective, and repeatable. In Tier 1, here are the top 10 tickers for analyst upside. The companies I'm going to focus on here are the top 5. So Broadcom in 5th with a 45.3% analyst upside. Then we have Constellation Energy in 4th at 49.55%, followed by Micron in 3rd at 52.32%, Nvidia in 2nd at 54.81%, and leading the way is Oracle in 1st place with an analyst upside of 79.55%. Next, we have the data for PEG ratio. Now, PEG ratio is better when the number is smaller. A number under 1 usually indicates the company is attractive from a price perspective. On this list, we have Meta in 5th place, Oracle in 4th place, Broadcom in 3rd place, Nvidia in 2nd place, and leading the way with a minuscule PEG ratio of 0.04 is Micron. When I combine the data from analyst upside and PEG ratio, I get the opportunity rank. This rank indicates which stocks are most attractive at their current prices. My plan is to invest in the top 3 companies on the Tier 1 opportunity rank list each week. So based on this rank, I'm going to put $20 into Oracle, $20 into Nvidia, and $20 into Micron this week. Now it's time for the Tier 2 list. The top 3 on this list are Palantir with a 41% analyst upside, Netflix with a 47% analyst upside, and Lumentum Holdings at 52.58% analyst upside. For PEG ratio, the top 3 are Netflix, ServiceNow, and Lumentum Holdings. And that brings us to the Tier 2 opportunity rank, where Palantir is in 5th, Synopsys is in 4th, ServiceNow 3rd, Netflix in 2nd, and Lumentum Holdings holds down the top spot on the rankings this week. From Tier 2, I'm only going to buy the top 2 ranked stocks. So my first buy is $20 worth of Netflix stock, and my final buy is $20 worth of Lumentum Holdings stock. These weren't emotional decisions. They weren't predictions. They were simply the highest ranked opportunities according to the system. I know this approach won't always beat the market. There will absolutely be weeks when I get crushed by the S&P 500. But I'm okay with that, because my goal isn't to predict the future. It's to consistently buy outstanding businesses when they're selling at attractive prices and let time do the heavy lifting. If you're building your own long-term portfolio, let me know in the comments what you bought this week. And if you enjoy following a transparent investing journey based on data instead of hype, I'd love to have you subscribe and follow along.